Yo, good morning. Welcome to another stream. Market opening number two, and we are live. I just need to tell the gang we are live, but just in case you catch this later on when I've left, it's going to be a nice short market opening. I really want these things to be, simple and straight to the point. So about 20 to 30 minutes we spend here together just really tracking the London session, especially for intraday traders. I say London session because fundamentally that's what I love to trade solo. And then in the afternoons, I can't do this because I'm stuck with the senior traders as we trade stocks. So we're just purely a bunch of stock traders in the afternoon on the New York session starts. So in this session, guys, just like yesterday's market opening, all I want to do is just to kind of like show you the heartbeat of the market for the day, right? Specifically throughout the London session. If you're like me and you are in Southern Africa, then you're looking at just between 9 a.m. till about 2, right? So 9 a.m. till about 2 p.m. on the day, because at 2 p.m. there might be a change of money. Sometimes trends continue, but when the New York session starts, there is always a change of money. And it's just habitually getting to understand these ideas, see them in real life. I am really hoping that you'll take effect. If you're on the live stream, just do me a big favor, please, and just let me know if I'm loud and clear. I see someone or some of you are there. Please let me know if I am loud or clear if you are already on the live stream before we start, just to avoid me talking for 30 minutes by myself. Okay, so yesterday we did something similar. We looked at a couple of articles. We kind of like caught up with what happened last night. I was explaining terminology, and really that's what I am going to do again today. The whole point is we need to start getting to really understand markets, the short-term moves, the sentiment, right? For intraday traders, supply and demand, absolutely, but the sentiment, market sentiment is crucial because you are a short-term trader. So you want to make a little bit of money every single day, catch a couple of pips, and so forth and so forth. But this will come, especially if you stick around and you do the module 3 of the course. You will then really start to operate a lot at that level, right? So let's start with the this thing. Let me just quickly refresh because I did have a quick scan earlier on. I need to have a little peek earlier on. But guys, you saw the Russian tensions, are back on the table. And I say back, I mean like it's really, really a big problem. All right, fantastic. Clear, I'm clear everywhere. Clear in Nairobi, fantastic. Thank you, Trevor. Clear in 365 clear. That could be a cool thing to start, right? So we got tensions across. I mean, markets yesterday did exactly what we thought they would do. If you recall yesterday, just to show you, like, so I'm just trying to see if this thing is useful to you. So let's go to something like AUD USD. If you recall yesterday's session, we said AUD was going to be strong because we got strong job numbers, etc., etc. All right, and if you look, our session was around about 9 a.m., right? So there's a 15-minute supply that I told everyone to sell at on the 11th of February, right? And price literally ran down to this demand. And if I go down to the 1 hour time frame, you'll see price moved about 57 pips, right? Yesterday's strength, right? And in the New York session at 2 p.m. candle, 3 p.m., they drove price down, right? Change of hands. Something as an intraday trader, you really want to be good at spotting, right? Knowing when to get in, get out, and then the overall strength of AUD, is almost trying to prevail. This is despite the fact that the markets, in my humble opinion, right, markets are just confused right now. Like, I mean, how do you even start to digest all the stuff that's happening, right? So let's quickly have a look, right? So this is where I like to come, number one, forexlive.com, because these are the latest ideas and trading headlines. I look at them before the London session and before the New York session, and sometimes if I am just doing nothing at night just before I go to sleep. Right. So, UK retail sales, okay, fine. That's not a big news mover. Trade ideas for European session. We can open these, but what I don't like is, generally speaking, traders taking trade ideas from these people because technical analysis differs for everyone, right? But it just really gives you a brief overview, right? Risk tones are faring more optimistic, right? Risk tones are faring more optimistic. So we're faring more risk on, risk on. So you can see since the Asian session coming to an end at 4 a.m., risk on. This is a risky asset. AUD is a risky asset. Rich tones risk tones are fading optimistic. That's what that means. Quickly, as we get into the European opening trade, following the news of whoever that was in some meeting, the Aussie and Kiwi was notably resilient yesterday, in spite of all the negativity and stock sell-off are both pressuring high. So you see, AUD was the winner, but you would have known this if you came into yesterday's morning live, because I told you this before the day started yesterday, that somewhere here we're going to have a very strong AUD for the day. AUD always carries NZD. They're like cousins, all right? So that's what this article is saying. Right, AUD JPY continues to hold key daily moving averages. We don't use indicators, but what they're basically saying is it's moving along a specific trend line that they've identified. You go do your own technical analysis to find it, right? So that's kind of like their trade ideas of the day. You can take that and then quickly go to your chart and draw what you've been taught, supply and demand levels. Rigstorn fare better ahead of the European sessions about 7:30 in the morning. Russia continues to reaffirm that troops are leaving following military drills. So Russia is saying, look, man, I don't know what you guys are saying. People are saying we are starting the war. People are saying we have started, like there were some shots fired and there was some this and that. He's saying, look, I'm just doing my drills and my boys are moving out. That's what Russia keeps saying. This was at 7 a.m. today. The time now is 9 a.m. Morgan Stanley forecast 6 Federal Reserve rate hikes in 2022. The other firm was on 7. Goldman Sachs at some point said 8. At the end of the day, the dollar and America are definitely going to get interest rate hikes, right? But this is where traders forget something so important. Markets price in everything. So a common trap that I've seen happen many times. So this was that daily demand yesterday. Yesterday was the 17th of February. I think we spoke about price opening the doors here. Market then spent the whole day trading sideways and dithering, right? So not much really has happened. But I want to quickly address this common trap, and I need space because I don't have my whiteboard open. It will take forever to open it. Man, let's go to the daily chart. When we say prices in everything, right? We're literally talking about this. Markets are our way. You see this, if you can see it, that the central banks keep calling for rate hikes, and Leroy keeps telling you that rate hikes are coming. Markets are going to price that in. If you guys followed my previous war room, I showed you that Investing.com market speculation Fed tool, the Fed monitoring tool, and 64% were already calling for 0.50, right? Half a point basis point in rate hikes. Be very careful, traders. You don't get you don't get stuck in the trap. That come March 16th, when we're expecting rate hikes, instead of getting 0.50, right, which is a big jump, by the way, we get maybe 0.25, which would be a normal, rate hike if things were normal. Things are not normal. But if the Fed does this, gives us a low rate hike, right, but it is a rate hike nonetheless, and says something like, we'll do 4 more of these throughout the year 2022, markets could potentially see this as negative, even though it's a good thing, it's interest rate hike, because markets have priced in a ridiculous number of rate hikes. I mean, if you're looking at 6 rate hikes in 1 year and there are only 4 financial quarters, it means your rate hikes substantially have to be quite big. So you can't go 0.256 times, right? Because, it won't be enough. So you might have to go 0.50 for the first one and 0.50 for the second one, and then slowly but surely come back down to 0.25. So when we say markets price in everything, this is one of the things you just must be very careful about, right? So central banks, financial firms keep reaffirming this thing. Reminder, Monday is a holiday, so that's next week Monday. Markets will be thin liquidity. More reports of shelling in Ukraine. So 6 a.m. shelling is, gunshots or small bombs landing or whatever it is. But we just read at the top that Russia keeps saying, look, man, we are moving out, right? So I don't know what's true or not. I'm not a war expert. I'm just trying to see if there's anything else. Heads up for next week. There's an RBZ meeting rate hike baked in, priced in, rate hike priced in for NZD next week. And you can just quickly go to Forex Factory. Let's quickly go to ZXY, New Zealand dollar. Right? You can generate your own trade ideas. If there's a rate priced in, and if that article or that headline is right, You simply have to go find it. How do you find it? You break down your trade chart. You look at where price is. Interesting. Markets are leaving a governing demand. This is NZD. This is the currency index for the New Zealand dollar. Markets are indeed leaving a governing demand. Markets fell in with a bearish engulfing pattern, and now a demand is trying to push back. Could the pushback be a retest of the bearish engulfment? Could the pushback have enough power to remove the bearish engulfment? You can see for the last 3 weeks, NZD or New Zealand dollar as a currency by itself has been quite strong. You drop down to the daily. All right, let's go now because there are going to be so many price gaps here. But you can see something like that. You can then make a logical conclusion that NZD can at least be strong up until it gets to make contact with this daily supply. You can then double check to see the alignment of the daily supply. The daily supply does align to some type of weekly supply. The weekly supply will most likely align is just under the bearish engulfment, actually, just under the bearish engulfment supply. And it depends how you draw it. If you go to normal candlesticks, you will notice that it's this one here. You see this bearish engulfment here, but there's also a higher supply. Now, if markets have priced in an interest rate hike, right, and the interest rate hike does happen, then it is logical to see a strong NZD RBZ basically unanimously, right? So all the people in the Reserve Bank who make these decisions expected to hike its cash rate next week. Inflation is going gangbusters in New Zealand, and the bank will respond. Remember, the world is dominated by American news. I'm always talking about Powell. I'm guilty of that. But the same thing happening in America is happening across all these countries because everybody went through COVID. Everyone went through some type of QE, etc. Right? So you've got a unanimous vote of NZD. Markets are already pricing that in. How do I know? Because smart people have already started buying. Smart people bought somewhere here via MTA on NZD's fact that the governor moved first, right? So I wouldn't be surprised if NZD is strong, a whole lot stronger next week. Risk FX, right, holding its gains. So risky assets, Euro, Pound, AUD, NZD, those type of assets, holding its gains after this meeting. So this meeting was about Ukraine, and so whatever came out of that meeting might have been temporary good news. I'm not going to get into that. I don't care about the war in that way, right? Secretary what will meet Russia next week, right? So if they're meeting and having meetings, it's in all likelihood, war might not happen. Heads up on the next variant, might be able to see it transmit better and cause worse disease. Like, can we take a break? Like there's another new COVID thing. I hope they're wrong. Goodness gracious, right? PBOC, right? So Public Bank of China, reference rate today. All right. So Bank of China is set on onshore yuan, set to set aside. So China has currently been trending a little bit lower. Biden to host a meeting with leaders of Canada, France, Germany. China has halted flights from whatever due to another COVID-19 outbreak. That's like another risk off thing, guys. If COVID starts to become a big thing and this war is a big thing, that's more risk off into the markets, right? So you're looking for the trades that suit that. And then I'm just going to stop. You guys get the drill. You get the drill, right? We've seen a lot of headlines basically ready to splurge more physical support without hesitation. That's important because JPY, Japan, is a safe haven. And if they're splurging more, right, that means these guys are not thinking about increasing their interest rate. If they're not thinking about increasing their interest rate, then JPY as a currency remains weak and we can take smart trades along those lines. Right, so that's enough about headlines. So we kind of like have a mixed bag in the markets. We have Russia tensions today again looking like they're cooling off. It's very hard to kind of like take that at serious face value. But we also have this idea that COVID and a new strain, we'll see when markets decide to pick that up. Now, China is still doing a crackdown on a lot of those tech companies that led to the Chinese stock market crash last week. So, you want to track, I still haven't done much on this China 50 index, which really was one of my favorite things to buy. I literally haven't done much on the China 50 index, right? So China last year, in its all shocking opulence, broke a demand, a governing demand, right? Last year, there was no threat of war. There was nothing. Broke a governing demand. And since then, has been trading sideways. Now, anyone knows that this year, you are far much more better, tanking Chinese stocks. I saw Warren Buffett and Charlie Munger buying a lot of these stocks, and that matches up with their investor style, right? Look at this. Anything that was very good and now devalued is worth buying if your long-term perspective in China is upward momentum. I think price will come down here. Right. If the crackdown, according to this article, is still continuing, no reversal on Chinese tech crackdown in sight, as Xi calls for more laws, work on laws, then I think we might get a push to the downside. When we do, I'll start becoming a big buyer down here. Right now, I'm not interested. Granted, we could draw a Fibonacci on this index, right, and say, well, Leroy, they could start to explode here, right, because we're at the golden ratio mark, and I would agree with that. The only problem with that analysis for me is we are still sitting at a governing supply. And so I would be looking more to the downside. I'm a bit pessimistic this year, and I hate that about me in the markets. It's really not my style, but unfortunately, I have to trade what I see. And right now, I'm very much, very, very, very bearish on a lot of things. Right. So I think for the first 50 minutes of our segment, we can just drop the headline stuff. This is all it is, just trying to catch up. Kathy Wood, those of you who follow her, she's in deep waters right now, but I think the markets are being very unfair to her. We'll talk about Kathy in the war room, right? There's not much. I mean, the other thing that you need to be aware of is there is finally a date for Biden regulating crypto. This was supposed to happen, regulating crypto. This was supposed to happen on the 10th of February. It did not happen. But I saw yesterday, right, that there we go. So you can watch the interview 13 hours ago. I just want to see a headline. I saw a headline anyways pointing to the fact that sometime next week there is going to be, this announcement finally that we up. I thought 10 February will definitely do the trick. Biden seen issuing crypto oversight executive order next week, right? So this is definitely happening next week. Biden's expected to issue an executive order directing agencies across the board to study cryptocurrencies and a central bank, blah, blah, blah. Ladies and gentlemen, do not bloody panic, please. It's useless sending me an SMS, at 3 a.m. About this kind of stuff, because chances are I might not respond. Right. Bitcoin is just going to do what it does. I want Bitcoin to fall. I don't care what the sentiment is to force Bitcoin to fall. But personally, I think it is all in our best interest for Bitcoin to fall. We looked at this chart yesterday in the morning session, and I told you, I still see a sell pressure. We looked at Ethereum, and I told you that as long as it's struggling to break 47 something, and I drew a line for you guys yesterday morning, and look, now we've got this big candle, guys, is just pure panic. Like, people are like, oh my God, they're issuing. Listen to the words. And retail traders are notorious for this. Is expected to issue an executive order to go study cryptocurrencies. It takes time for governments to do stuff, all right? Oh, it doesn't happen overnight. This is not like Zimbabwe, like where there's just zero democracy, right? Is the Biden administration against crypto? Absolutely. Is the Biden administration very much pro money? Absolutely. So they're gonna want to find a way to tax the living daylights out of crypto. Regulation in the short term is bad for price, but good for all of us in the long run. Think about regulation this way. There used to be, before driving licenses were invented, I hope people are aware of this simple example. There used to be cars, and someone invented cars first. And then when they invented cars, people started building and driving cars. And then they realized, geez, we keep having accidents. We need to regulate this innovation of cars and driving. And so regulation came with, you must have a license, and don't drive on the right when I'm driving on the right. You drive on the left this way, and I drive on the right that way. That is all what regulation does. Some of it is unfair, some of it will curtail price, but it also gives them a piece of the pie. These guys want to control it. So you can read this article for yourselves later, but the long-term run is, the quicker we get this out of the way, the better. You want to regulate before we get to 100K. That's my humble opinion. And I still believe, like I said yesterday, thanks to how retail traders think and fear mongering, 33,000, 37,000 will be the first tag. I think that's nicely back at play. Then after 37,000, somewhere here, you'll see why I'm saying 37,000, right? So 37, 3,800, somewhere there. If this doesn't hold, 33,000 is back at play. If 33,000 doesn't hold, 30,000 is back at play. I will be active, a little bit more in these lower levels. I could go to a crypto a platform and have sell trades. It's just I don't have time, to be honest with you, right now with all the stuff I have going on. But this I told you was going to happen yesterday, so it's happened, right? So I'm hoping these sessions are a big benefit to you. Now that we've kind of like figured out today we are mixed bag, we're risk on, risk off. It's important to then start to find structure to give us better clarity on the direction. The sentiment is mixed. Russia is like, we're not doing anything. We are pulling out. Rest of the world is like, they are lying, right? Yesterday, Nasdaq broke, a very significant area of defense for the bulls, right? That 14,400, because yesterday's fears were heightened. You're trading an indecisive, fear-based market. Be very careful that this level held today. Today is Friday. I don't know if people know this. Short-term swing traders, sometimes like me, we can buy an index on a Monday, Tuesday, or buy it at the close of trading day last week, Friday, and we want to take profit today. Friday is a popular selling day in the markets. Friday is let's go to January before all this war stuff started, right? I'll show you quickly. Right, so this is the month of January, and I'm looking for Friday. So I'm looking for 21,14,7. Historically, I haven't looked at the data this year, but historically, Friday is a good day to sell. Right, some swing short-term institutional traders love taking profits. So what am I looking for? I'm looking for January last month. I'm looking for the 28th of January. This is 22, 27, January 28. What's going on? Oh, okay. Let's go to the daily time frame because this is just all H4 candlesticks. Much better, right? So I just want to quickly see if this is still the same in the Nasdaq. But last year and the year before, in general, in the stock market, if you're a stock market trader in the New York sessions, a lot of people love taking profits on Friday, right? So this is 25, 26, 27, 28 here was quite strong, right? Upward turn. So this is where most people are buying from the 13,800 levels after a massive down drop. So we can excuse that. That's fine. The next Friday, 21, real quick. 21, big red day for Nasdaq. 14, big red day. 13, bearish engulfing retest. Basically, that sell on the 14 is what started the massive downtrend of the entire year, right? This big Friday started the entire sell since 2022. The price hasn't actually recovered from that Friday level here. All right, it's been a while. 7th of January, 5, 6, 7, another bearish engulfing pattern, right? And you can back test the stuff and test it out for yourself, right? So today is Friday, and I don't know. I'm not expecting much. I mean, there's some type of news in the market that Russia is putting back. But we're not trading a normal market, ladies and gentlemen. This market has nothing to do with your trading strategy. This is a sentiment-based market. Everything since the beginning of the year has been market sentiment, right? So markets and billionaires are moving money according to where they believe their fears will be best served, right? So they have been fearful right now. So if markets have been fearful, your best mirror, your best bullish trade of the day normally is gold and dollar, normally one of the two. Look at gold. This is now gold on the governing time frame, guys. You guys, those of you who attend my war rooms, you will know that gold was trading sideways on the governor, trading sideways on the weekly. This is now gold just this week alone, right? So let's start from the 14th of February. 16, 14. So on Valentine's Day, which is this, 14, yeah. So from here, 1, 2, 3. This is the move that gold has made ever since the seriousness of the war started, right? Pushing to the upside. We know we've spoken many times about gold waiting for something on the weekly time frame, massive accumulation, gold coming from a governing demand. And you're seeing it at play now, right? Markets now finally have a good reason to push gold up. All right, so there's not much. Right now, on to our usual final chart comparison as I wrap up our live stream. We are 24 minutes in. I would like to keep these 30 minutes. We have our usual chart. So I'm going to use the daily today to just to give you this perspective. Keep looking at these charts. Keep trying to see what they want you to see. On the daily, these all charts in front of you are daily. You got Euro USD, right? Made an up, and then right. If you draw a Fibonacci from there to there, I promise you this is a significant area. Price then pushed up. You can see there's a bullish engulfing pattern. Price is now trading sideways. PCP. In which direction will this PCP continue? Will it honor this new daily demand, which it has triggered to go up, or will it honor this long-term leg? We'll go to Euro USD to figure that out. Look at the other risk-sensitive asset, Pound USD. Right. Long time ago, there was a leg to the downside, but since February, upward trade, upward, sideways, upward. USD JPY, well, kind of like been slowly but surely trying to get to these lows, right? So it's slightly trading down at the moment. So risky assets, euro, pound versus the dollar are pushing up, and anything with the dollar seemingly is trying to start to push down. USD CAD been trading sideways, is not entirely sure what to do with itself. Swiss franc, as usual, more bearish than anything else because Swiss will always slightly gain strength when dollar is weak. We know that dollar is seemingly got a bearish sense to it, right? I'm still dollar bull, but I can't shake this bearish sense that I've been telling you guys about for a very long time. Ever since I noticed, which was about 3 days ago, that I've been so focused on teaching on the DXY from the daily that I myself missed on an important detail that the dollar actually made a bearish engulfing candle on the weekly time frame. Rule number one, Leroy, don't break the rules. Never forget to do a clean multiple time frame analysis every time you sit in front of the chart, because if you get comfortable with last week's analysis and the other week's analysis, you will miss. I don't know how this happened 2 weeks ago and I wasn't aware of it until this week. Me, myself, Leroy, I literally missed that there's a bearish engulfing pattern. And so downside pressure to the dollar is quite strong. You see that? You see when you slowly start to move from a higher time frame, you've got a bearish, you come to daily, you're like, yeah, man, that H4 demand is in trouble. It's not gonna last. Yes, we don't have strong imbalances from the daily because for sure, we're still in an upward trend here. But our big picture, the mayor is pushing price down. And what the mayor wants to do is, as far as I can tell, if I'm not mistaken, he wants to make sure that when all those interest rate hikes happen, everybody who is smart enough to buy low has a perfect entry. And who would want to buy here? Because look at how close we are to the monthly supply. I know there's so many notes there, but I'm going to ask you to see past them. See past the notes. So this line here, 95, where the bulls are in charge, right, happened earlier on, etc., etc. But when you start to really think about drawing a monthly supply on the DXY chart, what are you going to do with a candle that looks like this? Right? What are you going to do with a candle that looks like this? When you come to a Kinihashi candlesticks, what are you going to do? Right? Are you going to assume that this here is the turning point like I have? And I could be wrong. But for now, just to play it safe, I'm thinking this last doji candle is the turning point where the imbalance begins. If that's the case and I'm right, look at the difference where price is right now and that close. There's not a lot. You can make tons of money, right? Don't get me wrong. But it's not like the best buy of the century, right? A 3% increase to the upside, right? So price might be working very hard as quickly as possible, right, to push dollar a little bit lower, a little bit lower. Now, if this trend line breaks, ladies and gentlemen, if this trend line breaks on the daily, right, this is a daily trend line, not a weekly trend line. If it breaks, then your order blocks are all the way down there on the weekly time frame. Let's go to normal candlesticks. Right, so if we get such an incredible push to the downside for the dollar, just know you're going to get a recovery like this FOMC interest rate hike on the 16th of March, somewhere up there. And for me personally, I'm starting to assume, right, that the dollar might be wanting to push down, right? Something on the daily here could save it. I'm not denying all of that stuff, but I do believe that there will be an eradication of the H4 demand, by the end of today. By the end of market today, it is very possible that before New York's session even begin, this area here will be officially taken out. Bearish engulfing, glass effect. Price went up, a big red candle. It's not in bearish engulfing, but still glass effect. might have taken out the supply up there, but now there's a whole lot of consolidation in this area, which means your risky assets, if the news is true that Russia is blah 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 moving away, then you might see a push euro to the upside today, pound USD to the upside today, AUD USD to the upside today, NZD USD to the upside today. And that's where you want to kind of like run for trade ideas. So I've got 30 minutes on the dot. Let's look at trade ideas. In intraday trader, you're looking at small time frames. So if quickly, see, I've given you my arrows from yesterday. We want to see what you want to do is number one, double confirm the direction of the daily, because the daily is your governor for short-term trades. All right, you've got a PCP. It looks like a PCP. It looks like price wants to go up. True or false? True. No time. Right. So then you want to start to do a quick MTA from daily H4 to H1. Seeing massive consolidation. I'm seeing price trying to come down here. It did not tag, right? So there is always the possibility, right? The probability for a tag to the lower. That could even happen in the New York session where prices drag down there. But in the event that doesn't happen, let's go to the H1 time frame. You know, price in the most ugliest sense is moving to the upside. In the most ugliest way ever is moving to the upside. So I wouldn't take a trade on Euro USD today, only because I can't give you a confirmation. So for me, a confirmation would be this. You see this on the 1 hour time frame? I took this trade, right? I took this trade because this made sense. I saw a break of market structure and then I bought. I bought because price was at a demand and it took out a structure, right? Then I took profits when it made contact with this trend line, and I haven't been in this market since, right? So right now, I can't do that. I can't give you a new type of confirmation on for it. I can't say, look, there's a breakup structure here, because I don't really see that as a strong structure. I don't really see this here as a strong structure. It could be a structure, but personally for me, it's not the type that I want to trade, all right? But price could break out here to the upside. If it does, you are really playing this from a technical perspective. It is very, very dangerous because you're opening somewhere here and you really want your stop loss somewhere there. And then now you're hoping that price will preclude any other trend line I've drawn here. Because if price can break out of this supply, because you see there's a supply there on the left on the 1 hour time frame, right? Then this is what you're looking at, which is like almost a 1:2. For intraday, you know, slightly acceptable. But if you're right and markets do break out and you are not attached to money right now, so you break even, say during the New York session, or you allow price to breathe, so move up and down, you keep your stop loss open, then this is open to you for next week. Then your intraday might actually give you a beautiful risk to reward ratio next week, right? You literally want to take profit somewhere here, even though the supply has been taken out. So it is literally, to your risk appetite in your account. Personally, I don't know. I have no appetite to take this trade, but it's very possible that price could break out to the upside like that. Very possible, very possible. And if it does, I would play it like that. I'll play the long game, personally, because that's just how I know how to gain the most out of the markets. But for a short-term trade, like literally an intraday trade today, it's difficult. I mean, we could drill down to 15 minutes. There we go. We could do something like this, and it becomes a little bit clear. And it's like, okay, Leroy, there's a PCP there, there's a bullish engulfing pattern right there, right? So you could do something like this on the 15 minutes, have a stop loss outside there, and then something I may be interested in for short term is to enter down here, right? So I wouldn't trade the breakout personally, but what I would do is wait for price to come to me. That's something I would try, right? Intraday trading is not really my cup of tea, but personally, from what I can see, I would literally rather have the trade lined up like this. Let price explode right now in the opening. Maybe there'll be some dollar strength, during the New York session. Maybe price will then do something like this, and then we start to go. Right. So that's kind of like my money. You could trade the breakout right now. If you know how to trade the breakout, price has broken out. You simply wait for a retest of this trend line, and then you make sure that your stop loss is wide enough to hold. A 1 hour perspective on that matter is always decisive. My 15-minute entry looks like this on the 1 hour time frame. Right, so my 15-minute is literally trying to do a retest on this bullish engulfing pattern on the 1 hour. That's kind of like what I'm seeing, man. It's just an open live session. I'm just running through these assets with you, all right? Sentiment can change in an instant. If something happens in Russia, don't say, Leroy, what, because again, it's all sentimental, right? Where is the pound going? We spoke about the strategic move that the banks did during NFP and the pound. I'm just going to go straight to weekly, right? And we knew that they were going to set a trap on their daily supply. They are slowly but surely working to remove the daily supply. You can see the daily supply is being taken out. We said this, you would have not have made any money if you sold here, poor risk reward ratio. So we are not necessarily, in pain that we didn't take this trade. This trade would not have been a good trade. Now they're taking out the supply. We can see them take out the supply. You could, very risky to buy inside a supply. I never, ever propose it. But you can see the complicated 365 candles giving birth to a bullish scenario there on the H4. On the H1, you can see a break of trend structure-ish, kind of, not the prettiest, but it did happen, and you want to track when it happened. So 7 a.m., so this is all pre-London session. This is all pre-market. Someone from yesterday's order started to pump the markets. And then you can decide. Decision number one, I'm just going to buy here, right? Buying inside a daily supply, which is suicidal, right? Because they can shake the markets, move you left and right and take you out. Or you can hope for a slight retest there, right, into this zone, right? This is up to you, right? 15 minutes time frame. Let's see what it tells us. It tells us that the break of market structure that I drew in the 1 hour is very significant to intraday traders. It also tells us that this entire break of structure has not yet been tested. So risky, right? Because we're inside a supply. One could try their luck there and have their stop loss cover this value-based situation there like that. One could try their luck there, and then one, who's patient and really has no market ego and really just does not want to put their account in unnecessary harm would wait for a demand that is already outside a supply. Price might never come back, right? But if it does, then this would be a good place. Some people with enough capital split their accounts, right? People like Leroy tell us, do we buy here or there? What's the answer? I don't know. I'm just showing you where the demands are and the supplies are. This is a very good demand because it broke structure. This is a very good demand because it's outside of supply. So you can go, let's say you had $1,000 US, right? And you wanted to take a trade and you're going 5% per risk, and 5% of $1,000 is 0.10 lot size. You could go 0.5 buy here and a 0.05 buy there. You could take this risk and hopefully ride this way, right? It's really fundamentally what market sentiment feels like, right? But these are all short-term trades, and then you will know that hopefully by next week we'll finally have clarity and things can go back to business because there is a sell order block that we're looking at here. It has been tagged for fresh supply, right? And what I like about it is price didn't stop at a demand. And we know that is exactly what we talk about in module one. Markets stop somewhere in between after a fresh tag, and then markets go deeper for a retest, and the retest runs. So we want to catch that sell. We want to catch that sell, right? But we'll see. Right, guys. So kind of like, I hope this helped you. Bitcoin, I've told you, some people are holding losses right now. Someone sent me a screenshot. They're not a student in the academy. They bought Bitcoin because they saw crypto bullish news. I don't know. War rooms. I mean, I've been very consistent about this. Futures will give us a perspective of a lot of other things, right? But you can see here, let's go to charts and let's choose. Yesterday, by the way, Dow Jones took the biggest loss, about 600 points from the Dow. It was the index that failed the most. All right, just so we're clear, the Dow literally failed the most, right? And that's kind of like telling, because the Dow really carries the industrial backbone of at least America, but it's a massive big deal. So you can see at the top there in terms of relative performance, right? Things are not yet bad, but they can get very bad, right? I'm always worried when I see the dollar this low. I'm generally speaking, the other stuff I'm not surprised, but this is just relatively by day-to-day performance, right? This is not like a long-term overall market perspective, right? For if you want a weekly perspective, natural gas, all these platinum, palladium, all these things, gold, are doing well because of the sentiment, like a weekly perspective. Then you got your risky assets running. Remember, I taught you guys on Russell. I said, look, if Russell keeps doing this, look at where they, oh, man, what did I do now? There are no other indices, right? Ah, man, I apologize. I hope you guys saw that for yourself. There we go. There is a Nasdaq right there leading the race. Russell 200, small cap companies. I hope you guys can see this clearly there, are leading this race, right? So sooner rather than later, your Dow, your big cap, right, will slowly but surely, SP 500, Nasdaq 100, they will catch up, right? So that's why I'm giving the markets 30 days, right? I've given it a 30-day bottom. But until then, we must really watch, our sentiment correctly. Ladies and gentlemen, if it's okay with you, I would like to end our morning live session stream. I think, it's kind of like clear what it is that we need to do. You will let me know if this helped you. Please let me know if this helped you. Apart from that, trade smart, review your trades, trade in the direction of money, keep up with what's going on. This is kind of like your job as a trader. There is no substitute for that. Look out for the trade ideas we gave out, seek out confirmation, not greed, right? Seek out confirmation, not greed. These are orders from yesterday. If you understand how flow works, somebody closed and put out of buy orders yesterday. They're going to stop at some point. They'll have to come back at some point. If you want to ride them, you'll ride with them. But if sentiment changes, you're going to be in trouble. So you need to know all this stuff. You could, by the way, not trade this week. You could just wait for the war to end and the sentiment to accumulate than using your profits as a tester for market strategy, right? That is always an option. Take time to learn. Don't trade because Leroy is trading or whatever, so and so is trading. You could use this, especially if you have little capital. You want clean and clear trade ideas, right? Everybody, have a good day. Happy Friday. See you on Sunday for our traders war room, or Saturday. We'll decide today, and I'll put it in our public Telegram group. 365, shake my hand. Have a good day. Goodbye. I'm ending the broadcast.